Welcome back to the Deep Dive. Today, we're really plunging headfirst into, well, one of the most high-stakes areas out there, clinical stage biotech.
Yeah, definitely high stakes. We're looking at gene therapy, huge potential, right? Tackling things like cancer, diabetes.
Exactly. But also, let's be honest, massive risk involved.
Absolutely. And this deep dive, it's special. It's built specifically for you, our listener. We're taking the source material you provided, this detailed value investing analysis of Genprex Inc., ticker GNPX.
Right, dated May 22, 2025, so very specific point in time.
And our goal is to unpack the key insights from that report together with you.
Think of it as your shortcut through a pretty dense document. We know it's full of complex science, tricky financials, market stuff.
Yeah, lots to unpack. Our mission is basically to pull out the most important nuggets so you walk away really understanding what was going on with GNPX back then.
We'll cover the science, the leadership, the money situation, which is, critical for these pre-revenue companies.
And how the market saw them, who owned the stock, and crucially, all the big risks. It's a complicated picture.
Definitely. Especially trying to use a value investing lens on something built entirely on, well, future hopes and science. But we'll make sense of it.
Let's jump in.
Okay, let's start with the basics. Understanding the business, the science. What is Genprex?
Okay, so Genprex, clinical stage gene therapy company based in Austin, Texas, founded back in 2009.
Went public in 2018, right? At $5 a share.
That's right. And their mission is, well, ambitious. Developing novel gene therapies for big diseases where the options are limited.
I saw something about their origins, acquiring tech after the 2008 crisis. So
Yeah.
not built entirely from scratch.
No, that's interesting. They acquired some promising preclinical, early clinical data that became the foundation for their lead oncology program, REHOR RSA.
Mm.
The source also mentions, a kind of poignant history, ties to the co-founder's own health battles, and sadly, recent passing, which led to Ryan Confer stepping up.
Ah, right. He became CEO and CFO in May 2024.
Yeah, so that adds maybe a personal drive, but also a big operational shift right when things are critical.
Okay, let's get into the science. This is the core, right? Two totally different approaches, one for cancer, one for diabetes.
Exactly. Two distinct platforms. For oncology, it's their proprietary Genprex delivery system.
Genprex, okay, what is that?
It's their non-viral platform, uses lipid-based nanoparticles, basically tiny fat bubbles, to create something called a lipoplex.
Lipoplex, okay.
And that's designed to deliver plasmids carrying tumor suppressor genes. The main one is TUSC2 for their lead program.
So how does it know where to go? How does it target the cancer cells?
Right, that's the key claim. It's given intravenously, so system-wide. The nanoparticles have a positive charge.
Okay.
And cancer cell membranes, they often have a more negative charge compared to normal cells. So the idea is this charge difference helps the positive Genprex particles stick to and get taken up by the negative cancer cells preferentially.
Like magnets, almost?
Sort of, yeah. The report mentions lab data showing like 10 to 33 times greater uptake in tumor cells versus normal cells. In vitro, mind you.
Okay, in the lab. But that targeting, if it works in people, is crucial for side effects.
Yeah.
And non-viral, that's an advantage.
It could be. Viral vectors, they work, but sometimes they trigger big immune responses.
Right.
So a non-viral system like Genprex might be safer from an immune perspective and maybe easier to scale up for giving it systemically compared to some viruses. It's definitely a key differentiator if it holds up.
Okay, so oncology. Genprex, TUSC2 gene. What about diabetes? Completely different science.
Totally different. The diabetes program, GPX002, uses an AAV vector, adeno-associated virus.
AAV, okay, that's more common in gene therapy.
It is. This vector delivers two specific genes, PDX1 and MAFA, and the delivery method is different too, directly into the pancreas via infusion.
Directly to the pancreas.
Yeah.
That sounds tricky. Any hurdles with AAV itself?
Oh, yeah, definitely. Common issues are pre-existing antibodies some people have that can block the virus, and potential immune responses to the AAV vector itself, or even the genes it delivers. The report mentions Genprex is working on immunosuppression protocols to try and manage that.
Which would be pretty important for it to work long term.
Absolutely critical.
Okay, let's go back to oncology for a sec.
Right.
REHOR RSA, the lead drug. It delivers TUSC2.
Oh,
What is TUSC2 and why put it back into cancer cells?
right. TUSC2 is a tumor suppressor gene. Basically, its job is to stop cells from growing out of control.
And it's often missing or low in cancers.
Exactly. especially lung cancer. So the thinking is if you restore a working copy of TUSC2, you might, hit the brakes on the cancer.
And what does it actually do inside the cell?
Well, preclinical data suggests it does a few things. It can slow down cell growth, trigger cell death apoptosis.
Yeah.
It might also affect the local immune response. And here's something really interesting. It seems to mess with the cancer cell's metabolism, like reducing how much sugar it takes up.
Hitting the fuel supply.
Kind of. So this multi-pronged attack growth, death, immune system metabolism, that's the rationale for why it might work well, especially combined with other drugs to fight resistance.
Which brings us to their clinical trials.
Yeah.
Combining RECORE-S. The main one is ACCLAIM-1 in non-small cell lung cancer.
Correct. ACCLAIM-1 phase 12 study combines RECORE-SA with Tagrisso.
Tagrisso, that's a big drug for EGFR mutant lung cancer.
Right. And this trial focuses on patients whose cancer has progressed after being on Tagrisso, so trying to overcome resistance.
Phase 1 is done, Phase 2A enrolling.
Yeah, Phase 2A enrolling about 66 patients, and it has FDA Fast Track designation.
That's good. Suggests the FDA sees a need.
Yeah, potentially speeds things up. The report highlights a key upcoming milestone. Interim Phase 2A data expected early 2025.
So very important results coming up.
Hugely important. Positive data there would be a massive deal, especially if it helps patients resistant to Tagrisso.
And also trying it in small cell lung cancer, ACCLAIM-3.
Yes, ACCLAIM-3. Also Phase 12, RECORE-SA combined with Tecentriq and immunotherapy as maintenance therapy.
Okay.
Phase 1 enrolling about 12 patients. Phase 2 planned for around 50.
And this one has multiple designations. Fast Track and Orphan Drug.
Exactly. Orphan Drug is big because it could mean 7 years of market exclusivity in the U.S. if it gets approved, plus other perks. They were also presenting the trial design at ASCO 2025.
Good visibility, but we need the full picture. The report mentioned a setback. ACCLAIM-2 was stopped.
Yes, that's important context. ACCLAIM-2 was testing RECORE-ASA with Keytruda, another big immunotherapy.
Also for lung cancer.
Yeah, NSCLC patients who'd progressed, but they discontinued it. Cited enrollment problems, delays.
That highlights the difficulties, doesn't it?
It really does. Clinical trials are tough, unpredictable. Stopping a trial, even for logistics, it can definitely raise questions, impact confidence.
Still, sounds like they're pushing ahead, expanding the platform based on preclinical work.
Yeah, moving fast. They presented positive preclinical data at AACR 2025 for using RECORE-SA in RES inhibitor-resistant lung cancer.
RES inhibitors, like sotorasib.
Yeah.
That's a hot area.
Exactly. Showing promise alone, and with sotorasib, tackling resistance to approved drugs is a huge deal.
And they've been signing licensing deals too, right, in early 2025.
Very busy on that front. May 2025, licensed tech from Youth Health Houston for glioblastoma.
Brain cancer, notoriously tough.
Right. Followed positive preclinical data from late 2024. And April 2025, licensed tech from NYU Langone for mesothelioma.
Another really difficult cancer.
Precisely. So these deals show a strategic push to broaden the platform's potential. But
it costs money.
Exactly. Expanding the pipeline needs serious resources to move these preclinical things forward. And that increases the cash burn when, well, finances are already tight.
The report also mentioned exploring another gene, NPRL2, also using Oncoprac.
Briefly, yes. Based on preclinical data from Feb 2025, suggests they see Oncoprac as a platform, not just for TUSC2.
Okay, let's switch back to the diabetes program, GPX002. Sounds like a really different approach.
It really is. Very novel. For both type 1 and type 2, using that AAV vector, delivering PDX1 and MAFE genes directly to the pancreas.
And the goal is to reprogram cells. What's that mean?
So for type 1, the really ambitious idea is to get existing alpha cells in the pancreas, which normally make glucagon, to start acting like beta cells and producing insulin.
Wow. So replacing the function of the cells destroyed by the immune system.
That's the hope. Basically, give the alpha cells new instructions. And maybe, just maybe, these reprogrammed cells could avoid the autoimmune attack. That'd be huge.
And for type 2?
For type 2, the idea is more about rejuvenating or replenishing the existing beta cells that aren't working well or are dying off.
The potential impact?
Yeah.
Getting off insulin?
Yeah.
That would be life-changing.
A total paradigm shift, if it works.
Where's this program now? Still preclinical?
Yeah, still preclinical.
Yeah.
But they have reported some encouraging data, mouse models, but also importantly in non-human primates. Monkeys
What did that show?
showed stabilized glucose levels, reduced need for insulin. They've got presentations coming up at big meetings, ASGCT and ADA in 2025.
They work with the University of Pittsburgh on this, I saw.
Yes, exclusive license from Pitt, and they just signed a new sponsored research agreement in May 2025 to keep the preclinical work going.
What about the FDA interaction the report mentioned? Any change there?
Ah, right. This is subtle, but maybe important. The report noted they'd submitted a request to meet with FDA about the non-clinical studies needed before starting human trials, the IND.
Okay.
Previous language might have suggested they were closer, like poised for FDA guidance in 2024. It's just phrasing. But it could hint that getting that pathway defined is maybe taking longer or facing more questions than hoped.
Okay. Something to watch. They also set up a subsidiary for diabetes, Convergent Biotech.
Yeah, focusing just on the diabetes program could be strategic, maybe for future partnerships or funding specific to that program.
Makes sense. And underpinning all this is their IP and collaborations.
Right. Gotta have patents. They have them covering Oncopre, the candidates, trademarks. The licenses from Pitt, UHealth, NYU are obviously key foundations.
And research collaborations with places like MD Anderson, University of Michigan.
Yes, those lend scientific credibility. But remember, licenses and collaborations usually come with strings attached, future milestone payments, royalties if things succeed.
How does tiny Genprex stack up against the competition in these massive cancer and diabetes markets?
Yeah, these are huge, crowded fields. Gene therapy markets growing fast, predicted over $18 billion in the U.S. by 2033. Cancer gene therapy, maybe $25 billion in 2025. Diabetes, over $89 billion globally. They're aiming big.
So what makes them stand out, potentially?
In oncology, it's really the Genprex non-viral system and focusing on TUSC2. They seem to be the main ones pushing TUSC2 in the clinic. Targeting resistance could be their niche.
Into diabetes?
The novelty is trying to reprogram cells inside the body in vivo using AAV. That's different from some others focusing on, say, replacing cells or modifying them outside the body first.
But the hurdles.
Yeah.
Cost manufacturing.
Huge hurdles. Even if Genprex has potential manufacturing advantages over some viruses, gene therapy production is super complex, super expensive, and GPX002 is AAV with its own challenges. You just can't compare them financially to big pharma competitors.
So how do you compare them?
You look at pipeline stage, market size potential, their cash, their risk versus their market cap. And Genpre's tiny market cap basically screams extreme risk compared to bigger players.
Let's try that value investing lens again. Buffett's framework. Is this an understandable business? Long-term prospects?
Okay, this is where it gets tricky for value investing. The goal, treat cancer, treat diabetes, sure, that's understandable.
But the how?
Exactly. The how, novel gene therapy, clinical trials, regulation, manufacturing, it's incredibly complex science. Needs deep expertise. It's an R&D bet, not a stable, predictable business selling widgets. Very different from what Buffett usually likes.
But if they do succeed, the long-term prospects in those huge markets?
Undeniably vast. A successful drug could be enormous, but, and this is the giant but, that success depends entirely on clearing massive hurdles. Scientific, clinical, regulatory, financial, all highly uncertain.
So no traditional moat yet?
Not really, just the IP and early data. It's a high-risk gamble on a very distant, very uncertain future. Pretty far from traditional value investing criteria.
Okay, let's pivot. We've covered the science, the business concept. Let's look at the people running it and the money keeping it going. Part 2, management, money, market dynamics. Starting with leadership, Ryan Confer, CEO and CFO since May 2024.
Right, that dual role. Worth noting, he's been with Genprex since 2009, background in tech and finance.
Pros and cons to the dual role.
Well, pro could be efficiency, maybe tighter integration of strategy and finance. Con is concentration of power, maybe raises governance flags for some, especially given the company's delicate financial state. And he stepped in after the previous CEO passed away.
Who else is key on the team?
Report mentions Dr. Mark Berger as CMO, handling clinical. Thomas Gallagher, SVP of IP, seems busy with those recent deals. And Suzanne Thornton-Jones, SVP regulatory.
Having people in those roles is vital, but do we know their specific gene therapy experience?
The report doesn't really detail that, which is, a relevant point for evaluating the team's depth in this specific field.
And the board. New leadership there, too.
Yeah. Jose Moreno Toscano became chairman, also May 2024. His background in pharma, M&A, investor relations, that seems potentially quite valuable right now.
Makes sense.
Other directors have governance, legal backgrounds. And they have a big-name scientific advisor, Nobel laureate Dr. James Rothman. Adds credibility, even if it's advisory.
They also have scientific boards, right, chaired by Dr. Jack Roth.
Yes, Dr. Jack Roth, key figure in the original TUSC2 research, provides that scientific continuity. And they just formed a mesothelioma advisory board. These guide the R&D. Governance-wise, they mention standard stuff, code of conduct, using external ethics boards for trials. Standard, but important.
How's management handling the money, capital allocation, given the pressure?
Well, it's mostly going to R&D, obviously, but the big story is cost-cutting. Really significant cuts in FY 2024.
Net loss down 32%, R&D down 40%.
Yeah, G&A down too. And that trend continued into Q1 2025.
How do they manage that?
The report mentioned changing their manufacturing partners, the CDMOs, lower material costs, less travel, fewer consultants. And a big headcount reduction went from 28 people down to 16 in 2024.
Wow, nearly half the staff.
Yeah. Well, at the same time, they're doing these new licensing deals to expand the pipeline. So it's this really tough balancing act / cost, but keep the R&D moving on multiple fronts. Stopping at Claim 2 might have been part of that pragmatic cost control too.
The big question is, can they cut so deep without hurting the R&D needed to actually hit those milestones?
That is the absolute tightrope they are walking, yes.
What about insider ownership? Do they have much skin in the game?
Report says it's low, around 1.01%. There were some recent share sales by the CEO and CMO, but the filing said it was for taxes on stock awards, not like they were dumping shares on the market.
Okay. They did get stock awards late 2024.
Yes. But what the report doesn't show is significant open market buying by insiders, especially with the stock price so low.
Which, for a value investor, might be a red flag, or at least not a green one.
It can be seen that way. Stock awards align them with future upside, sure, but insiders putting their own cash into the stock at distressed prices, that sends a stronger signal of conviction. The absence of that here is noticeable.
So back to Buffett's lens on management. Able and trustworthy.
Well, they've shown ability, right? Getting FDA designations, licensing deals, cutting costs drastically, but they're also facing huge challenges. A Claim 2 stop, the financial crunch, NASDAQ issues. It shows how hard their situation is.
And trustworthiness.
Standard governance is there, filings seem compliant, but trust can definitely be eroded by, terrible stock performance and constant dilution. Rebuilding investor confidence is a huge task for the current team. They need to show they can manage the money, hit milestones, and raise funds without just wiping out existing shareholders.
Let's dive into that money situation. Pre-revenue biotech financials.
Yeah.
It's all about the burn.
Exactly. No revenue, all eyes on expenses, losses, and the balance sheet. Net loss in FY 2024 was $21.1 million. That was actually down from $30.8 million in 2023 thanks to those cuts.
And Q1 2025 continued the trend.
Yeah, $3.96 million loss, down from $6.0 million the year before. The cost cuts are definitely showing up.
But you have to watch the loss per share, right? Because of dilution.
Absolutely critical point. The Q1 2025 loss was $6.26 per share versus $3.69 in Q1 2024. Looks way better, but only because the number of shares went way, way up.
Let's look at the balance sheet around March 31st, 2025. Cash, that's the key number.
The most critical. SimplyWall.est reported about $3.47 million cash then. But that number changes fast with financing. Back in September 2024, it was only $1.49 million. Total assets were around $6 million.
Debt was zero.
Yep, relying purely on equity. Total liabilities were about $2.1 million.
And stockholders' equity. Crucial for NASDAQ.
Absolutely critical. NASDAQ minimum is usually $2.5 million. SimplyWall.sd showed $3.9 million equity as of March 30th, 2025. If their official Q1 filing confirmed that, they likely met that specific NASDAQ rule at that time, probably due to Q1 financing.
But the number has swung wildly.
Hugely, from over $7 million down to under $2 million in backup. Shows how precarious their equity position is, how dependent on constant cash infusions.
Cash flow tells the same story.
Consistent negative operating cash flow, burning cash. Selling stock is the only way they bring cash in.
So the cash runway, how long could they last?
Well, based on recent quarterly losses of $4 or $5 million, very short without more money. The SEPT 2024 filing explicitly said they needed funds beyond DECEFT 2024. SimplyWall.est estimated maybe 3 months based on older data. The key takeaway is the persistent short runway. They always need more money soon.
Which leads to their financing history. constantly selling stock.
Yep. Registered direct offerings, ATM programs where they sell shares into the market. They did big raises in March 2024, July 2023, used the ATM through late 2024.
And that May 2025 S1 filing mentioned in the report?
That's the proof right there. Filed May 14th. Signals they intended to raise more money, like right away. The terms noted 1% fee to the agent plus warrants for 5.5% of shares sold. Those aren't great terms. Reflects how tough it is for them to raise cash and guarantees more dilution is coming.
Traditional financial ratios, PE, ROE, totally useless here.
Completely. Meaningless for a company like this. Negative ROE just shows they're burning through equity. Price to book is noted, but hard to interpret when book value relies on intangible IP. Price to sales is 0. These numbers just scream speculative R&D venture.
And obviously, no dividends.
Nope, not happening. Every cent goes into the research lottery ticket.
Okay, let's gauge the market's temperature. Market sentiment. How did the market view Genprex around May 2025?
Overwhelmingly negative, basically. Just look at the stock price. Around $106,781 per share then. Nanocap, penny stock land.
That's a brutal drop from the $5 IPO, even the 52-week high around $4.
Just a massive long-term decline. Deep market skepticism. And that price is why they have the NASDAQ minimum bid price problem, trading under $1 for too long.
They had until August 2025 to fix that.
Right. Get the closing price over $1 for 10 straight trading days or face delisting, a huge pressure point.
The trading volume seemed high for the price, though, 5-6 million shares a day.
It is pretty high. Suggests a lot of active trading, probably retail investors, day traders. That adds to the volatility. Big swings are likely.
Market cap tiny, $7-8 million.
Yeah, nanocap. That valuation basically says the market sees immense risk and puts very little value on the future potential. It's pricing in a high chance of failure, not a traditional attractive price.
But then there's that huge disconnect the report pointed out. Analyst price targets were way, way higher, like $8.70 average.
Yes, this is fascinating. Targets between $7.50 and $10, strong buy ratings from the couple analysts covering it.
What does that huge gap between C-rounded 27 cents and $8.75 tell you?
It screams speculation and risk. The analysts are modeling success scenarios, big future revenues if things work out. But the market, through the stock price, is saying, whoa, hold on, the risks are enormous. We're applying a massive discount here.
So a value investor sees that gap
and has to decide if the market is massively wrong about the odds. The only value is betting against the market's extreme pessimism and hoping the company survives to prove them wrong. You really have to question those optimistic analyst assumptions.
What about short interest? People betting against it.
Moderate short interest, yeah. 1.6 to 2.5 million shares short. But the days to cover is really low, like around 1 day.
Meaning shorts can get out easily.
Exactly. Low chance of a big short squeeze unless there's some truly shocking positive news. The shorts just reflect that market skepticism.
Options market limited.
Report said unavailable on NASDAQ. Pretty common for stocks this low priced. Limits hedging or speculative options plays.
They communicate through the usual channels, press releases, SEC filings.
Standard stuff. Always good to cross-reference PRs with the official SEC filings. Investor presentations can be, marketing.
And comparing them to peers using financial metrics is impossible.
Totally impossible. You can only really compare based on pipeline stage, market potential, cash, risk versus market cap. And Genprex is likely right at the bottom valuation-wise, reflecting that perceived extreme risk. Not Buffett's idea of value. More like a potential cigar butt, super cheap because it's distressed, maybe one puff left if you're lucky.
Okay, we've hit the science team money market view. Now let's synthesize and really focus on the unavoidable part, the risks. This is crunch time for evaluating the situation.
Agreed. For Genprex, understanding the risks is everything. Clinical and regulatory are huge.
High chance of trial failure, delays, enrollment issues. A claim, too, proved that's real.
Absolutely. Trials fail constantly in biotech. Could be efficacy, safety, logistics. The FDA path for gene therapy is complex, evolving, maybe even tougher. Manufacturing these things is hard, and relying on outside companies, CDMOs, adds another layer of risk. But the most immediate pressing risk, financial.
The cash burn, the constant need for more money.
Dilution.
That's the elephant in the room. Huge burn rate. That May 2025 S1 filing proves they needed more cash right then, which means significant more dilution was almost guaranteed for existing shareholders. And there's always the risk they can't raise enough money, the going concern risk.
And that financial distress links directly to the NASDAQ delisting threat. Yep. the risk of getting kicked off the exchange, both the under $1 price rule and the minimum equity rule. Even if they met the equity rule for Q1, that price issue was staring them down. Delisting would be disastrous for liquidity, fundraising.
Competition is fierce, too.
Insanely fierce, huge markets mean huge competitors with way more resources. Even if they get a drug approved, will it sell? Against alternatives. Given the likely high cost, reimbursement is a whole other battle.
The report also flagged the 2025 U.S. tariffs specifically, an extra macro pressure.
It is. Even if some drugs are exempt, tariffs on imported materials, components, equipment used by their manufacturers, that could hike costs, squeeze their already tight budget even more.
And cause supply chain delays.
Potentially, yes. Disruptions, needing new suppliers. That costs time and money they don't have. Delays in getting clinical trial materials could be really damaging.
IP risks, relying on third parties. Standard biotech risks, but still real.
Standard, but you can't ignore them. Patent strength, challenges, meeting license terms. And relying on CDMOs for manufacturing, CROs for trials, their performance is critical, but not fully in Genpre's control.
Okay, let's bring it all together. The big picture synthesis for Genpre, based on that May 22, 2025 report.
It's textbook, high-risk, high-reward biotech. One side, innovative science, big targets like lung cancer, diabetes, Oncoprec platform, TUSC2, the AAV diabetes idea, some promising early data, FDA designations.
But weighed against severe operational and financial headwinds.
Exactly. Crushing cash burn, constant dilution pressure, NASDAQ delisting threat, massive competition, high clinical failure risk shown by a claim to, plus external risks like tariffs.
So almost a binary bet. Succeed big or fail completely.
Feels very much like that. One big win, great acclaim data leading to a partnership, maybe positive FDA news for diabetes unlocking funding that could totally change the story, maybe justify those analyst targets.
But failure.
Failure to hit milestones or just running out of cash before they get there could mean losing most or all of the investment.
So from that value investing perspective, again, it's miles away from Buffett territory.
Oh, yeah. Pure speculation. That $27 price baked in extreme pessimism about the odds. Any value was betting the market was wrong and that management could somehow navigate the minefield and hit a scientific home run before the clock ran out. No margin of safety in the traditional sense.
So bringing it back to you, the listener, and your source material.
This deep dive, using that specific May 22, 2025 report you gave us, hopefully gives you that clear, nuanced picture. We pulled out the key pieces. The science, the team, the shaky finances, the market's view, ownership, and all those critical risks.
It helps you understand the potential, sure, but also exactly why the market was so doubtful and what the huge hurdles were for GNPX at that specific time.
Right. You have the context now to assess that report or others like it.
So here's a final thought, maybe something for you to chew on. For a company like Genpre, where today's value is almost zero based on fundamentals, and everything hinges on uncertain future breakthroughs, what qualitative factors become more important? Things like management's adaptability under fire, the real strength of their partnerships, the true robustness of their technology platform. How much weight do those deserve compared to financial metrics that are, frankly, meaningless right now?
That's the really tough question you have to wrestle with when looking at these kinds of speculative ventures.
We've taken a deep dive into your sources on Genpre Inc., unpacking its complex story, the science, the risks, as it stood on May 20, 2025. We really hope this helps you digest the information and continue your own informed exploration.
And remember, digging into the specifics of the source material is always key. We've noted the source in the description if you want to review it yourself.
And just a standard reminder, this discussion was for informational purposes only. It's definitely not investment advice. Investing in companies like this, clinical stage biotech, carries significant risks. You could lose your entire investment. Please do your own thorough research.